Welcome to Patrick and Train's Year End Tax Tip Series. I'm Beulah Priyankam, and today we're going to be talking about estimated tax payments for 2025, what they are, who needs to pay them, key deadlines, and how the new One Big Beautiful Bill Act may affect your tax planning this year. What are estimated taxes? Estimated taxes are quarterly payments you make to the IRS throughout the year to cover your income taxes. Instead of waiting until tax season, you're basically paying as you go, which helps you avoid surprises and stay on top of your finances. Who must pay estimated taxes? The US tax system is pay as you go, meaning you're expected to pay taxes as you earn income, not just at filing time. If you're self employed, a freelancer, a landlord, or an investor with income that doesn't have tax withheld, you'll likely need to make the quarterly estimated tax payments. Here's the general rule: you must pay estimates if you expect to owe at least $1,000 in taxes after subtracting withholding and credits. Corporations must pay if they expect to owe $500 or more. Even if you have a job, side income like a gig work, rentals, or dividends can trigger estimated payments. And remember, if you owe no tax last year and were a US resident all year, you're off the hook for this year's estimates. When are estimated payments due? Estimated payments are made in 4 installments throughout the year: April 15th, first payment; June 15th, second payment; September 15th, third payment; January 15th of the following year, fourth payment. If any date falls on a weekend or a holiday, the due date moves to the next business day. Farmers and fishermen have special rules. They can pay a single estimate by January 15th or skip quarterly payments if they file by March 1st. How to calculate your estimated payments? So, how much should you pay each quarter? The IRS gives you a safe harbor rule: pay the lesser of 90% of your current year's taxes or 100% of last year's tax, 110% for high earners. That keeps you penalty free. Most taxpayers simply divide last year's total tax into 4 equal payments. But if your income varies by season or project, use the annualized method on Form 2210 Schedule AI. It lets you pay more in high income quarters and less when income is low. You can estimate using Form 1040 ES worksheets on your prior return as a guide, adjusting for known changes like new deductions, income shifts, or tax law updates. How to pay your estimated taxes? You have several ways to pay: IRS Direct Pay, free from your bank account; IRS Online Account or IRS To Go app to schedule and track payments; EFTPS for businesses or anyone preferring secure scheduled transfers; credit or debit card. Small fee applies. Be sure to note Form 1040 ES and include the years you are paying for on your payment. And don't forget, your state may also require separate estimated payments. Most follow the same quarterly dates, but states like California have different percentage splits, so always check your state rules. Penalties for underpayment. If you don't pay enough taxes during the year, the IRS can charge an underpayment penalty. Basically, interest on what you should have paid earlier. This interest rate changes quarterly. It's around 4 to 7% in 2025. You can avoid penalties if you owe less than $1,000 when you file, or pay less than 90% of your current year's tax, or 100% of last year's tax, 110% for high income taxpayers. Life events matter too. If you retired, became disabled, or were affected by a disaster, the IRS may waive penalties when you request it with Form 2210. OBA tax law updates starting 2025. Now, let's talk about how the One Big Beautiful Bill Act, or OBA, affects your 2025 taxes. This new law keeps the current tax brackets and standard deductions in place, avoiding big increases. But it also adds several new deductions throughout 2028. Senior deductions $6,000 extra per person age 65 and above. Overtime pay deductions deduct the time and a half portion of overtime pay up to $12,500 single and $25,000 joint. Tips income deduction deduct up to $25,000 in tip income. Car loan interest deduction up to $10,000 of interest on new personal vehicles, conditions apply. Plus, the state and local tax deductions cap rises from $10,000 to $40,000. Child tax credit increases to $2,200 per child. These changes can reduce your overall tax, so be sure to factor them in when calculating your estimates. Planning tips and state considerations. Estimated taxes aren't set it and forget it. Review your payments mid-year, especially after major life or income changes, or when new laws like OBA kick in. If you've been overpaying, you can reduce your remaining payments. If you earn more later in the year, increase your third and fourth quarter payments to avoid penalties. Also, remember, states have their own estimated tax rules and might not adopt all federal deductions. Check your state tax agency's website or ask your CPA to confirm. Let's recap. Estimated taxes keep you compliant with the pay-as-you-go system. Deadlines: April 15th, June 15th, September 15th, January 15th. Use the safe harbor rule or annualized income. Pay electronically and include your state. Avoid penalties by paying on time and adjusting for life changes. And don't forget to apply new OBA deductions that may lower your 2025 liability. Remember, the IRS is phasing out paper checks, so make your payment online at irs.gov/payments. Thanks for watching. If you have questions about estimated tax payments, reach out to us at Patrick & Rains CPAs, helping you close the year with confidence.